Hey everybody, Andre here at the Coaches Hangout. Well, I'm in my Jeep, I'm heading up north to my cabin, but I just got off the phone with one of our students and it gave me a great idea for a video. Why would a 20-year-old buy 5-year term life insurance? Do they think they're gonna die in the next 5 years? Well, of course not, but they may want to take steps to protect their loved ones in the unlikely event that were to happen. Well, in today's video, I'm going to talk about something different. I'm going to talk about Canada Deposit Insurance Corporation, but I want to stress it's not that I'm specifically concerned about Canada's banking system. It's one of the most stable banking systems in the world, but it's COVID-19, and we've been hearing some pretty scary things. I mean, CMHC is saying housing prices could plunge 18%. Think about that for a moment and how it could impact the banks. We're seeing stock prices go up and down in dramatic fashion. It seems no matter who you are, you're at least a little bit concerned about what wave 2 of COVID-19 could bring. So it only makes sense that you understand how Canada Deposit Insurance Corporation works and that you make sure that your deposits are structured so that you are well protected. Just like our students can study anywhere, I can work anywhere remotely. So I just got up north. It's a rainy day in Muskoka, so I figured I'd bang out the rest of this video. Before doing so though, I want to stress that these videos are geared towards students that are preparing for specific exams. It's not deemed to be tailored investment advice. If you want to know how CDIC coverage might impact your specific situation, be sure to talk to your advisor. And I'm also going to provide a link in the comments section below to CDIC's website where you can find all of the details. But if you look on the screen now, you're going to see a question taken from our exam preparation tools. Now, Investor Karim's heard about CDIC that protects certain deposits if a member institution, such as a bank, were to fail. Now, Karim has $250,000 sprinkled over several accounts, and he wants to maximize his coverage, and he's asking you, what would you recommend? Answer A, have multiple accounts with the same financial institution, but with different branches. Answer B, hold deposits with maturity dates of 5 years or more. Answer C, hold the financial institution's GICs, but also invest in their preferred shares and common shares. And answer D, hold deposits with various financial institutions. All right, here are the top 4 things that you want to know for exam purposes. You're also going to get lots of practice when working with the CY exam preparation questions. Number 1, coverage is per member institution, not per branch. So having accounts at many branches with the same financial institution is not going to increase your coverage. Now, when you walk into a financial institution, normally on the front door, you'll see a little sticker that will indicate whether they're a member of CDIC. But if in doubt, just ask. Number 2, there is separate coverage for different categories of accounts, such as your personal accounts or your RSPs or a trust account. So you could potentially have $100,000 in your bank account and a separate $100,000 in deposits in your RSPs with the same financial institution, and both would be covered. Number 3, this is really important, it only covers deposits, not investments. Remember, CDIC stands for Canada Deposit Insurance Corporation. So it covers things like if you have money deposited in a bank account or a term deposit or GIC. It does not cover investments. So if you've invested in, let's say, a bank's common or preferred shares, that isn't going to be covered. Again, that's a risk of investing. So if you invest in, let's say, a bank's shares and it doesn't perform that well, CDIC isn't going to cover it. That's an investment. It's not a deposit. And number 4, funds must be payable in Canada. Now, with this in mind, let's circle back and tackle the question. Answer A, have multiple accounts with the same financial institution, but with different branches. Well, that ain't going to increase your coverage. Remember, coverage is per member institution, not per branch. So we can eliminate A. Answer B, hold deposits with maturity dates of 5 years or more. Well, that's not going to increase the coverage. In fact, deposits with a maturity date of more than 5 years, there was a time when that wasn't even covered. Well, it's covered now. It's a recent change, but it certainly isn't going to increase your coverage. Answer C, hold the financial institution's GICs, preferred shares, and common shares. Well, remember, CDIC only covers deposits, not investments in, let's say, a financial institution's preferred shares or common shares. So we can eliminate answer C. And finally, answer D, hold deposits with various financial institutions, assuming they're members. Well, that would increase your coverage. So if you had deposits with Bank A and Bank B and Bank C, that certainly will increase your coverage. So let's select answer D, and we're correct. Thanks everybody for watching this video. I hope you found the content helpful, and if you did, be sure to smash that like button.